Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for November 10th, 2020. I'll tell you the time, it's 7:20 at night. So I've been going since 3 this morning, 3:30, so it's a long day. And I enjoy it. You know, there's a lot of action. Where are we in all these markets is what you've got to ask. You know you're in a rotation. If you don't realize it, where are you? The tech stocks, they're not being dumped, they're being moved out of. There's a very big difference in those words. And people are coming back into the things that used to work. So you're getting, as an example, if we step here, we can see the Dow got a bid, the QQQ was under pressure, you were under pressure in the XLK, the XLC and others, they'll be under pressure too. Bonds, well, they're getting dumped here to the downside. Why? Investors want more yield. They're taking on a big risk in the stocks. They think stocks are going to go higher. So if you want to move money into fixed income and get less than 1% on a 10-year note, they're not that interested. And that's causing some of these auctions to be questionable. I was very surprised today when I saw that the 10-year note auction was, number one, the brokers had to take in 25% of it. They don't want to do that. They had no choice. It didn't go well. Rick Santelli gave it properly today, a D+. I know Rick, good friend. And he's right. I mean, it was terrible. And a surprise, you would think near 1%, you'd get something more. You didn't. So we're in that transition where new President-elect Biden, while President Trump has every right to hold out until he's satisfied he lost the race. Other Democratic runners had done that in the past. Nothing wrong with that. So don't say, oh, blah, blah. And I'm not being political, but it's happened in the past 20 years a couple of times. Okay, but we know. That's all that really matters. We know that it's going to be with something we don't see out there, President Biden. We also know, and this is to me what's now ruling the market, is we have a COVID-19 vaccine that could be released in November according to data today. So you could be getting your first shots if you're in the medical profession, because it'll be the frontliners that get the first shots as early as this month, the second shot 3 weeks from then. But the point is, it's going to start rolling out. I'm assuming that is the case, and the market is adjusting to it. So when I look at the tech sector, we had a gap here. We had just talked about that. It got filled. I don't know if you're going to fill this one or not. I'd like to see it filled. I don't like gaps left on charts. They're good. But they at times, like you had one here, it didn't get filled until this break. So will it get filled? I don't know. I'm comfortable that the market's backing off. My comfort zone has taken the market out of an uptrend. You now have a pattern of a higher high and a lower low. That is what the swing line does. The swing line looks at the bar before it. In other words, if it's a daily bar chart, that. If it's a 15-minute bar, the 15-minute bar. A weekly bar, the weekly bar. And I've set up a 5-step rule that determines is the number from it drawn to the low or the high of the current bar. And if you take my charting course, they're explained in detail to you. This is part of our charting software. I put it in there, but I don't license it out to other parts. So if you're with TD, if you're with other brokerage firms, you got to write it yourself. And it's not an easy task, but I wish you the best. The rules are clear. What about looking at the market through here? Where could the next support be? Well, I believe the 18-day average of closes is like the DMZ zone. It's the neutral part of a chart. And when markets break back, it's not uncommon to go there. When they rally, it's not uncommon to get into that area to check it out and figure what you're going to do. Even when you came here, if you come all the way back to these numbers, you spend 2 days there before you broke down further. It's a zone. It's not the absolute number. It's the zone. That's what I'm looking for. You're out of a trend. You have upside bias since you're over that number. You failed to continue going on, again, that challenge of the upper Bollinger Band, which is what you hear me preach. I think that's the right term here, that I think the smart money comes out on the first challenge of it. And now that you're not trending, I don't look for that smart money to do anything right away. Momentum turning down. It was overbought. It's going into a correction mode. You're already there. As long as either of the numbers that make up the slow stochastic are under 70, the market is not overbought. And as you can see, we had come yesterday, we had one of them there very clearly. So now you're already not overbought. Okay, getting back to neutral. SMH failed at the upper Bollinger Band. You hit it up here. You had numerous opportunity to come out, and the market just zooming back down. Are we trending? We are not. You have a lower low and a higher high. I don't call that a trend. My definition of a trend in price, X, any other filter, is uptrend, higher highs, higher lows, downtrend, lower highs, lower lows. The trick is to get something that measures them consistently to determine what is a low, what is a high. That's what the swing line does. When you come over to the XLI, you've been in an uptrend. You don't have to have anything done prior to this. You would come in with a, what? Higher high inside day. And if you cross this, now you get the higher part. Okay, but you're over the upper Bollinger Band. I don't trust that. Markets rarely stay over the upper Bollinger Band. So what are you immediately doing? I wouldn't be surprised if you correct tomorrow. I think this market wants to get back there. You're overbought. I don't see buying at the upper Bollinger Band something that the pros do. That doesn't mean I'm right. There's plenty of pros. You know, I can't speak for everybody, but I can't imagine they're buying over a Bollinger Band if they understand the algorithm. The bets against them, I don't believe they're doing that. In XLE, you've gotten up to the 100-day average. So we talked yesterday, you had a big spike away and never even challenged the band. If you continue going, then the 100-day average comes into play. The correction part is if you try to get back under the Bollinger Band. And if it were to spurt up again to 200, I mean, it can go, there's no telling how high, but what I can tell you is you're overbought and you're on borrowed time. You don't stay over Bollinger Bands like this that often. All right? Go back. You don't stay under them. You don't stay over them. You play for that. I want to be the other side. When you take a look at QQQ, yesterday you got up to the upper Bollinger Band. You had an outside day down, and you corrected right to my line in the sand. Okay, neutral. It's a neutral time frame. There's not something to do, and I hope my subscribers understand this, and you do. There isn't something to do every day of the week. You wait. Some people are invested all the time. Watch CNBC. They're never out of the markets, right? So they ride them when they're down. They're coming back, but they go through pain to hold those positions. If you think not, you'd be very wrong. Not everybody has every trade in their portfolio winning. And traders that do things like we're looking at, well, this is pretty hard to catch. You had to be a buyer at the bottom. And by the way, I did say I thought that the first challenge of the 200-day average, you were going to get people buying to go into the election and come out if they can get to the Bollinger Band. It's exactly what occurred. But now, too hard of a market to try to catch. GLD. Okay, we've gone from the upper Bollinger Band, objective, downside, lower band, objective. Remember the first hit. I'm assuming if you're short, that's your objective. If you're long, that's yours. You're neutral in this market. And you have a higher high and lower low. And momentum has suddenly gone from being overbought to a full correction in the market. If we come over to the gold miners, you haven't made it down to these lows. I find that interesting because gold has. So the miners are actually stronger than we're seeing the price of gold in itself, but this market stepped out of its trend. Now the market gave you a chance. This is how the market looked going into the election. You made your run to the upper Bollinger Band, and I'm certain I was saying, I can't believe the pros aren't going to take money off the table. You even had Friday, November 6th. I'm going, whoa, I didn't expect this to occur, that it just fell apart. And that was obviously yesterday's COVID-19 news, and now you're getting further extension down under that low. So the market is not trending anymore. You had 2 days to come out and enjoy yourself. Again, the rule, the first challenge of the upper Bollinger Band, my rule. It's not everybody's rule. TLT, my rule, coming out at the lower Bollinger Band. You're not trending. This is a vertical price drop off the COVID story. Again, what are we really going to get lower and lower interest rates in an economy that's going to rebound if we have a vaccine? Think it through. I don't think so. So that's what you're getting at this point in time. It's called a reset. This vaccine is a reset. The FXE, the euro, outside day down, made its run at the upper Bollinger Band. I'm looking for support here. This is still an uptrend. The market is corrected, being overbought. If we take a look yesterday, you got up very close, and here you're overbought. This is Friday. Any reading over 70 is overbought. Now the market's giving you the correction back. I'll be looking to see how the market's supported at 110.74. I'm expecting the pros are going to be friendly to the market there. So I put up that, but I want to tell you what I did do for you today. I did a ETF report on silver, and I did the futures on silver. So it's going to start off on the futures markets. At the end of the day, I'm a futures broker. I know you know that. I used to be a stockbroker. I used to have a stock firm and ran it and owned it. And obviously, you know, with the discount going the way it was, I saw the light at the end of the tunnel and said, not for us. But to make a long story short, I did the silver report looking at the monthly charts, the weekly, the daily. I'm then going to carry you into the seasonals that go from December into the beginning of the year. You'll see them on there. Then I'm going to give you price count objectives, which is something that is unique to the Linn Group, and it's a way that we measure where markets might go up or down, what are the areas they might be going to, and there's room here if the market wants to go up. And then I carry you into the ETFs. Because once you understand the price count for the pricing of the futures, remember the ETFs count on the futures. The futures don't count on the ETF. It's the other way around. So the price of the futures helps you now with the ETF to see where that's going, and I give you the weekly and the daily, and I wrap it all up for you. If you haven't seen one of my reports, and they're videos, so we don't mail anything out, you go to our website, under the word research, you're going to see when you click on the word research, a drop-down menu, click on the report and enjoy yourself. You get, as a non-subscriber to all my other research, 3 views per 365 days of my special reports. I make you a promise, there's a lot more of them coming out because now I have everything I needed to start doing these. I've got the COVID situation, while not cured yet, certainly in better control. I think we have a new leadership in government, and it's now time to start approaching the market inflation, no inflation, what's going on. Silver's the first one I've done to commemorate that. I'm Ira. You have a great day. I'll talk to you tomorrow.